Welcome to Royle Subjects, your go-to podcast for anyone trying to navigate the ever-changing world of real estate.
Come with us as we explore topics that are always relevant, never boring, and designed with you in mind.
Welcome back to another episode of the Royle Subjects. I'm Sarah Fothergill.
I'm Danielle Firth, and today we have a special guest with us, Curtis Kirkey of Dominion Lending Centers. He is a mortgage agent with Intrepid Mortgages. Welcome.
Hi.
Thanks for coming here today. Why don't you give us a little bit of your background?
Yeah, so I'm a mortgage agent with Dominion Lending Centers. Made the move over to mortgage agent about a year ago. Prior to that, I was about an 8-year mortgage specialist with Scotiabank doing just mortgages. Prior to that, bank manager, lender, worked in finance. So about 25 years worth of financial experience in my background.
That's amazing. Probably gives you, a big advantage when it comes to this situation.
Yeah, I've seen a lot of different things.
Scope of things.
Absolutely.
Yeah. The focus today is going to be pre-approval versus pre-qualification.
Right.
I think this topic's really important right now because we are in the spring market. We're heading into an even busier, faster moving time in the coming months. And so we've really been encouraging a lot of our clients to get their ducks in a row.
That being said, why don't we just start with the most basic question? I know everyone's wondering, what is the difference between pre-qualification and pre-approval?
So these are words that can have different meanings depending on who you're talking to. But essentially, pre-qualification is you're going into a mortgage app that will break down those ratios for you on the math. You're putting in what you think your income is every month. You're putting in what you think your monthly liabilities are every month. And I don't like that, and I don't like those calculators. Because the problem is the answer that it gives you usually will be much different than what your mortgage broker is going to give you, because your mortgage broker knows what to break down. They know exactly what income you're going to be able to use. They know exactly what payments they're going to be using for each of your liabilities, right? It's like, for instance, your credit card payment on your application isn't based off of what you're actually paying on your credit card every month. It's 3% of your balance for most lenders. The total income, if you have overtime every year, a lender isn't necessarily going to be able to just use the overtime because you made a $10,000 bonus last year. You might put that in the calculator and it could give you a completely wrong number.
So a pre-qualification is using numbers that have not been verified.
Correct.
And then a pre-approval is using numbers that your mortgage professional is able to double, triple check, run the numbers, use their processes to be exact.
Really, to me, there's only one way, and it's a full pre-approval. So if you were interested in looking at a home and you want to know if you afford it, you should call your local mortgage professional. If that mortgage professional isn't asking you for all of the relevant documents, pay stubs, T4 slips, possibly tax returns, whatever it is, and they're not accessing a copy of your credit report, then they don't actually know what the actual numbers are in the formula, and they're not giving you an accurate number.
It's more hypotheticals at that point.
Absolutely.
Yeah.
So when a client is going to get pre-approved, when they come to me, I'll sit down, I'll have a full meeting, I'll talk to them about the whole home buying process, what default insurance is, all of the other things, so that the client has an idea of what they're getting themselves into. And then I will go through a full application. I'll get all of the documents, I'll run all the calculations. And usually, once I have the documents, I can tell you, usually to, within a few $1,000s, what your total mortgage amount's going to be when you go to purchase.
That's really great. You paint the full picture.
Absolutely.
Here is all of the options available to you, including mortgage default insurance, which can help you if you want to put less than 20% down.
Yeah, it is very important also to note that even with the full pre-approval, you should still every time make sure you have that condition of financing on the offer. You can't get a firm and binding approval from a bank, which is what you need to remove conditions on a home, until you have the offer in hand and that offer is submitted to the lender. It's very important that every borrower make sure that they have that financing condition to at least give me an ability, once the offer is in, to send that offer up and make sure that the lender agrees to it and the lender goes through the documents and approves everything.
This is making me think of a situation I had with a client recently. So they had a pre-approval. We found a house that they loved. We've been searching for a long time. And they wanted to skip the financing condition. And I said, just so you know, if we skip that financing condition, you are accountable to buy this property. There is no escape route. And so I said, let's call your mortgage professional and see what they have to say about it. We were able to talk them into going ahead with the protection and getting the financing condition. Yeah. And it's a good thing that we did, because the lender that they had, been approved by wanted an appraisal because they didn't think that the purchase price was equivalent to the value of the property.
Absolutely.
So we had to provide comps, we had to get an appraisal done. It ended up working out fine. But if we hadn't had that condition, we could have been in a messy situation.
Yeah.
Especially, so my job as a mortgage professional, I do have clients once in a while that say, hey, we want to go in no conditions. It especially happened a couple of years ago when the market got hot.
Yeah.
And it's very important that people know that if you go in with no conditions, it doesn't matter what your broker tells you. It doesn't matter what your real estate agent tells you. The risk is on you.
Mm-hmm.
And you're the one holding the bag if something happens and you can't get that financing. And people say to me all the time, well, what could happen? Lots of things can happen.
There's a lot of scenarios.
Right?
That's a whole other episode.
It's a whole process. It's a whole other episode. So just make sure that, so my job as a mortgage professional is if a client tells me they're about to go in with no conditions, I'm going to take a look at the application. I'm going to see what kind of fallback positions they have. Do they have extra money available for down payment if the appraisal comes in low? Do they have access to the cash are they going to be able to get, let's say, private lending down the road if they need to close on something real quick? It's not something that as a mortgage professional I can ever encourage a client to do because they could be putting themselves at risk.
To echo what you said about how it goes back to the accountability and the onus on the home buyer. And I think that that's a really hard pill to swallow, but having been home buyers ourselves, we know that ultimately we are responsible for the decisions that we are making. We are trusting our advisors, whether it's our realtor, whether it's our mortgage agent, all of these people on our A team, so
Absolutely.
to speak, to guide us in the right path. But at the end of the day, the buyer is the one who's in the driver's seat making that decision. They're picking the purchase price. They're picking you know what I mean? Like, they're choosing all of those things. And I think to those of you that are listening, that's the piece that we want you to hear, is that we're here to educate you, to provide you with the knowledge and resources, tips and tricks, the actual people in the marketplace to be able to support your purchasing decisions. But at the end of the day, you've got to make that choice. And if you're not coming from a position of confidence, that's what we're here for, is to guide and direct you. So I appreciate that you're speaking so candidly about this, because it's really hard to navigate the home buying process, but more so from a position of we're just being transparent and honest. The market was a little wild a few years ago. We saw people make choices that in other circumstances they wouldn't have necessarily made, but it's our job as advisors on either side to guide and direct as best we can. And I really appreciate knowing that we work alongside someone who has that same kind of mindset. And I think that that's something that you can expect from the Royle Group in general. That's something that we pride ourselves in, is that consistency of service. And the providers that we partner with, we're all here with the same intent, which is to get you to your definition of success, so that when you commit, you feel good about your decision.
And I would like to add, if you are dealing with a mortgage person and you're in that situation and you are being told, yeah, it's fine, go ahead. If you haven't provided all of your income documents, if you haven't provided all the other documents you need, they haven't accessed credit reports, if they haven't done a full application from start to finish, then definitely seek a second advice.
I think it's safe to say too, because I've had client feedback on this, the mortgage approval process feels invasive. It feels like, I had one client who said, do they want a blood sample? Like, they want absolutely everything. And I think, to your point, it should feel extensive. And if it's too surface level, that should be your first warning of, hold on a minute. Like, if they don't know everything about me, how are they giving me this number and this assurance, right?
Yep.
So it's, consider it the inspection of your finances to give you that confidence to be able to move forward. So if it feels invasive, in this case, maybe that's a good thing.
Yeah, absolutely.
Yeah, absolutely.
It has less to do with the lender you're dealing with, less to do with the bank you're dealing with, or whether or not they're a broker who's level 1 or level 2, has more to do with the person.
Yeah.
So make sure you talk to someone that you get referred to you, that the other professionals trust, that you can be sure is going to do the proper job.
Okay, so I guess, wrapping up questions is, with the pre-approval, what is the timeline for, starting the process to actually getting your pre-approval, and how long is it valid for?
If I got an application from you, let's say in an hour, and I sent you an email and you were able to provide me all the documents I needed, if there were no exceptions and the pay stubs are good and it followed regulatory guidelines and the income ratios were good and everything was great, I could have a pre-approval figured out for you within 30 to 40 minutes. It does not take long, even faster than that. So when I pre-approve a client, I know from my experience with certain lenders exactly what they'll accept and what they won't accept. So I'll use them as a baseline of what I can get done. So that I know at the very worst, let's say Jim sends me documents and I know Scotiabank is going to approve this deal based on these ratios and based on these docs because of my extensive experience. I can talk to that client then and say, listen, I know Scotiabank's going to do this deal. I'm also going to look at other lenders to see if there's other lenders that'll be better. That's for you. That's part of my process over the next little while. But you can be confident that you are going to be able to go out and put an offer in for this amount of money, and I am likely going to be able to get this approved. the most important reason that you want to make sure you get a full pre-approval is we're in a changing rate market. When you get a full pre-approval, I can submit to a lender and I can get your rate held for 120 days. So you know, worst case scenario, this is what you're going to get. Right. So it's very important that you get full pre-approvals before you go in and start offering on homes.
Especially if you're offering on homes in a season like this where we're not totally sure what the rates are going to look like in the next 120 days, right? Like as that needle moves forward, there's a lot of uncertainties. So we're going to have you back for more episodes.
Sure.
And I feel like, you know, if this episode really resonated with you as a listener, and this is sort of getting your mind spinning of, okay, I really got to get some ducks in a row. I need to start planning. I need to start actively pursuing. That's what we're here for. You know how to reach us. And Curtis, thank you very much for taking the time to share this information with us and with our listeners, because it's one piece of the puzzle, but towards a really exciting path for a lot of our home buyers for the spring and, you know, moving forward into the summer. So
we'll be sure to put Curtis's information in the comments of the episode. But I'm Danielle.
I'm Sarah.
I'm Curtis.
And we can't wait to talk to you next week. If you have any questions regarding real estate, please feel free to reach out at our website, theroylegroup.ca, or The Royle Group on any social media platforms.
See you around.